When it comes to GST tax planning, the reverse QTIP election is an important tool in the toolbox of any planner. For a marital trust, it allows a choice of which spouse's GST exemption will apply to a marital trust. With the reverse QTIP election, you apply the GST exemption of the first spouse to die. However, without that election, you must apply the GST exemption of the surviving spouse at the surviving spouse's death. That allocation is made on the estate tax return, the 706, for the surviving spouse's estate. However, it's easy to assume if you're the preparer of the surviving spouse's 706 that a reverse QTIP election might have previously been made. However, it's imperative that the preparer go back and check to see if that is indeed the case. And that was the issue in Private Letter Ruling 2021-16006. I'm Griffin Bridgers, and this is 10 Minutes with Griffin. For today's episode, episode 190, we're going to get into a situation where a late GST allocation was permitted in a recently issued private letter ruling. As always, this presentation is not intended to substitute for legal or tax advice and is provided for educational purposes only. And if you'd like a copy of these slides, please email me at griffin.bridgers@gmail.com. Now on to the presentation. So, when it comes to GST exemption, sometimes it's automatically allocated to trusts, and sometimes it's manually allocated to trusts. I've discussed that in prior episodes, but one issue when it comes to allocating GST exemption to a trust is the estate tax inclusion period. Long story short, what that does is for a lot of revocable and some irrevocable trusts, it prevents any GST allocation from being allocated to that trust. Because if there's a certainty that that trust will be included in the gross estate of a living beneficiary, what that means is that typically you can't allocate GST exemption until that period of estate tax inclusion is closed. Now, one common trust where that could apply is a marital trust for which a QTIP election is made. Now, I realize there's a lot of similarity in acronyms now. We have a QTIP and an ETIP, but they're completely different concepts. What the QTIP trust does and the QTIP election does is that it allows you to take a trust that's the life estate equivalent for a surviving spouse and allocate marital deduction to some or all of that trust. Now, in so doing, that does create an ETIP period because allocating marital deduction to a trust means that it will be included in the gross estate of the surviving spouse at the surviving spouse's death. Now, because that marital trust, or at least the portion for which the QTIP election is made, will be included in the surviving spouse's gross estate, that would, on paper, create an ETIP period. However, there's one special election that's used solely for GST tax planning purposes, and that's known as the reverse QTIP election. By making that election, you can allow the estate of the first spouse to die to allocate GST exemption to that trust, which would usually not be permitted under this ETIP period set of rules. Now, what happens here is that when that reverse QTIP election is made, then when the surviving spouse dies, that trust is already GST exempt, and none of the surviving spouse's GST exemption will be allocated to the portion of the QTIP trust for which the reverse QTIP election was made. However, one issue that can pop up is what happens if there's no reverse QTIP election? In that sort of situation, you do face the traditional ETIP analysis where, at the surviving spouse's estate, or at the surviving spouse's death, the marital trust is not GST exempt and is included in the surviving spouse's gross estate, and the estate of the surviving spouse has to allocate GST exemption. Now, it's a big, long-winded way of basically just saying that the reverse QTIP election is a light switch. It allows you to select whose GST exemption among a married couple will be allocated. Without the election, you allocate the GST exemption of the second spouse to die. With the election, you allocate the GST exemption of the first spouse to die. Now, this was at issue in a recent private letter ruling where late election relief was sought for the allocation of the GST exemption. Long story short, what happened is at the first spouse's death, the marital trust was created and a QTIP election was made, but no reverse QTIP election was made. So what that means is that no GST exemption was allocated to that trust at the first spouse's death. Now, what was at issue here was the second spouse's death. The second spouse dies. The trustees of the revocable trust prepare a 706, get it filed, but guess what? There's no allocation of the surviving spouse's GST tax exemption to that QTIP trust. In other words, the preparer didn't look back and see if there was a reverse QTIP election or not. If they had, they might have known that, hey, this trust isn't GST exempt, and we have to make an affirmative allocation of the survivor's GST exemption here. Now, once the return was filed, this omission was discovered, and luckily the IRS granted late election relief under this private letter ruling under Treasury Regulation 301-9100-3. Now, this relief for a late election is fairly common and is really something you see in most of these private letter rulings, as long as there is reasonable and good faith reliance on a tax professional, which there was here, and as long as the government wouldn't be prejudiced. Now, this presentation is not about late election relief and how you get it. It's more that we want the key takeaway that any 706 preparer really has a duty to dig deep. You have to go back and look at any prior 709s and prior deceased spousal 706s, because the gift and estate tax calculations are cumulative. But not only that, there are elections, especially on a marital trust, that could affect the GST tax planning picture. Now, while a preparer will commonly look to prior use of applicable credit and estate tax exclusion, along with portability elections that might relate to the same, there is a special need for attention for the presence or absence of a QTIP election and or a reverse QTIP election, and that's really what was shown in this private letter ruling. If you're preparing the 706 for the estate of a widow, check for that reverse QTIP election and make sure that if it's not there, if it hasn't been made, that you allocate GST exemption to the assets of the marital trust. Now, it's important to note logistically and mechanically that portability elections do not preserve unused GST tax exemption. So if you're doing this, you're not going to be looking to the portability election, and that would have hurt in this scenario, obviously, but it's pretty common to have this type of planning structure where there's a marital trust where you can make a partial QTIP election or a Clayton QTIP election, and in that situation, that's an effective way to preserve the unused GST exemption of the first spouse to die. But on the back end, it takes very intentional application of GST tax exemption for that type of planning to work. As always, if you have questions or topic suggestions, you can email those to me at griffin.bridgers@gmail.com. But thank you for listening to this episode of 10 Minutes with Griffin, and I look forward to seeing you in the next one.